how to use the trendline strategy and the previous day high-low strategy to do the trading. Here's an example. We have the previous day's low drawing here, and we have the trend line. There's low, and higher low. And also we have high and higher high. So this market is defined within the two trend lines. It's a range upward. There are three scenarios for the both strategies. First, both will support the same direction. Like both will support to trade up or both to support to trade down. Second, they give you the different suggestions. One could support going up, the other could support going down. And then the third is that one of them could be uncertain, so you have to make a decision while you watch the market to go on. This example talks about the third scenario. In the very beginning, you don't know, but as the market goes on, you will decide the trend direction. As the market goes, you can see that the market breaks the bottom trend line with consecutive bear bars, which is the downside pressure. Especially for the last two bars, they're getting bigger and bigger, larger than any of the previous bars on the left. So this is a trendline breakout to the downside. The probability is high just based on the trendline strategy. However, we do have the previous low level drawing here, so this previous low could be a support level. So when the market goes to the previous low level, we must see and decide whether we want to trade down or we want to wait to see the market will reverse to the upside. However, just at this moment when it is reaching the previous low level here, a little bit higher probability the market will go down given this breakout consecutive bear bars. And then lower probability the market will respect this previous low. So we'll have to see whether this previous low level will support the downside pressure or it's gonna reverse the trend to the upside. Next bar, we have a bull bar. It's a small bull bar, the body is small, and this shows uncertainty. But at least at the moment, we do not see any kind of a strength for support to going up. So this is a good sign and then serve as the pullback. In case next bar or even later on, there's a good signal bar, but there's no big consecutive bull bars or big trend bars going up, then we can trade down. So that means the market penetrates this previous day level and then didn't respect it. Then the next bar is a bear bar. This bar is a very good bear bar because the body accounts over 60% of the candlestick. So this bar is the confirmation of the trend direction and then it serves as the signal bar because just based on these bars we can see that the pullback here is very shallow, the support is not very strong, so it's a downtrend at the moment. It's a confirmation of the downside pressure. You can see later on the market goes down even further, so this is a very good trading opportunity for short. And then let's take a look at this part here. When it touches the previous low level, basically it ignores it, so that means this previous low is not respected and then you're not expecting the market to go back to touch this previous low later on. However, another scenario is the market goes to the previous low but it bounces back to the upside. Then this market becomes a range day. So for range day, not many trading opportunities. So if that's the case, you'd like to trade some other financial instruments.